The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 21st, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't call in, you can always let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 111 points. She's trading out at 24,838. S&P's up 10 points, trading out at 27.27. NASDAQ 100 up 0.25%. That's 16 points. The upside, Russell up 10 points. That's nearly a little over 0.6%. The upside, 1580 is what she's printing. Semis are up. New York Stock Exchange is up. Composites is up. Wilshire 5000 up. The trannies are up. The spot volatility index trade out at 1713. That is still above its 50-day exponential moving average. Something to think about. You've got gold trading up $11, trading down to $13.23. Silver, 26 cents to the upside. That's nearly 1 7/10%. Light sweet crude up over 2%. That'd be $1.45. Trading out at $65 even. Steven, we do have a couple of questions that have come in early. The first one from JB. So let's go help out JB. And JB wants to JB wanted to take a look at the ES Mini, the 30-minute wave counts on it, and we're going to give JB more than just that. But very specifically, JB, if I take a look at what I have as wave counts inside the ES Mini, the 30-minute chart, where I start out here is the low that was put in at 1,500 hours. That was back on the trading session of, let me just make sure I get the right day for you. That was March the 19th. Now, my first wave count, in essence, what this says is we could be in wave number 6, letter F, at this stage of the game. Could be letter C. Let me tell you how I arrive at that. When I start the counts from that swing point down there that we just talked about, when I get up to this letter E, I can, specifically see a change in trend to the downside. So I just start doing the counts, and that was at 8 o'clock in the morning. That was on the trading day of March the 20th. When I get to a wave count, in this case here to the downside, where I can get into that fourth wave, and I believe Basil's doing a workshop here in the upcoming future talking about that fourth wave, or letter D out here. That's when I go ahead and I start at least a secondary account. On my system here, I can put as many wave counts from as many bars as we like. In this case here, we're just taking a look at 2 of those. So we're either in wave number 6 or wave number 3, JB, and that's taking a look at the 30-minute time frame. What else can we provide to you for a 30-minute time frame out here? Well, we can do 2 other things. We can do more, but we're going to do 2 other things for you by just simply taking a look at the TAS market profiles for the ES Mini. Here's the 30-minute chart. We'll go ahead and put this up on the screen for you. And you're going to see that price is trading above the top of its bearish structured box. That was a box that formed out here at about 9:30 yesterday. No, today, March 21st. What am I talking about? Started about 9:30 this morning, Price closed above it at 11 o'clock. It's been off to the races. Now, if price pulls back, where it ought to find support is at the top of that box, the top of that bearish structured box. That is 27.22. So your question might be, well, what's the chances that it's going to go ahead and pull back on the 30-minute chart? Well, all that we really have to do is go take a look at what the market breadth is on a 30-minute basis for the ES Mini. And voila, there you go. There you go, my friends, as we take a look at it, just as we're coming on the air here, right at 105, we're at 111 right now, we had one of those bearish crossovers. That's right. As we speak right now, on a 30-minute basis, 75 stocks inside the S&P 500 are trading above the top of their box, while there's 214 below the bottom. So is there a pretty good chance that we're going to continue to pull back and maybe even test that level that used to be resistance? Now the question is, will it be support? The answer, my friend, is blowing on the charts that you and I are just looking at. And we're going to have to go with, yes, a continued pullback into the 2 o'clock time frame inside of the ES Mini. Does that mean the high is in? Could be. I don't know. And there's a lot of good reasons why I don't know and why I think nobody else knows as well. But we can take a look at that. So, JB, I hope you got more than you bargained for when asking if we could take a look at those wave counts inside the ES Mini for its 30-minute time frame. Now, the second question that came in by email, and that was from Jim. And Jim, I'm paraphrasing here because I'm not looking at the email, basically was saying he's heard a number of people say over the past couple of days that Celgene is a buy. And the question was, what do I think? Well, I don't know. Let's go see what the charts say if we take a look at Celgene. Let's do two different things. We know we like to take a look at this set of charts. We also know and take a look at this chart that Celgene has had the tar and feathers kicked out of it. What we mean by that is price on the daily, the weekly, the monthly is trading below the bottom of its TAS market profile. So doesn't look very good. However, when we see something like that, isn't the question, is this Celgene forming a bottom? Now, if we just simply take a look at volume, what we know here at this moment is back on March the 2nd. March the 2nd, kind of a popular day. We take a look at what's going on inside the markets. This entity, this stock, what buyers and sellers were doing combined on March 2nd was creating a volume of 8.7 million shares. Yesterday, in the low out there, which was not tested yesterday, 86.55, it got down to 86.60. And it did so with 8.4 million shares. So a similar, actually lighter volume. Lighter volume is lighter volume. But interestingly enough, it didn't make a lower low. So what does that mean? Jelly bean. Probably appropriate to even say that this time of year. I think what you and I need to do is go take a look at its wave counts out here. So let's go do that. Here I'm just trying to find the top. Where is it that I should start? That takes us out to the trading day of October 2nd. If we start doing the wave counts to the downside, and you're not going to believe this. And if you're going to ask me, do I think some of those folks who said, hey, Celgene might be a good buy versus it saying goodbye, maybe they know. Maybe they listen to the show. Because Celgene, on that March 2nd day, got to wave number 7, letter G. When we come back from this break, and I don't know how that happens, I just know what happens. Let's go take a look at it a little further. Maybe it is a buy. We'll be right back. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We'll take a look at the stock Celgene, ticker symbol CELG. It has had the snot kicked out of it over the last several months out here. And the question is there a potential bottom pattern that has formed? So one of the things that we did was we took a look at a high that was back in October of 17, October 2nd to be specific. We just simply started. We can see these gaps out here. They're scary, no doubt about it. But it looks like there was maybe a I can't say a three gap, but let's just take a look at what we do know. What we do know is when we start from that October 2nd high, we can get down to the Celgene daily chart singing in the key of G. We like that key of G because oftentimes that's where we see a change in trend. And that took place while at the very same time, in the very same day, and that was March 2nd, price was moving lower, doing less relative energy. Boy, we like to see Doble-Gee patterns out here, and that's what we got. We got a double. Price was moving lower, doing less relative energy, and the cavalry arrived on March the 2nd. Nice little bullish engulfing candle, nice little three-river morning star. You got two. You got two for the price of one when it comes to bullish reversal signals. And yesterday, that low was not taken out. And slightly lighter volume out there. So this is an absolute candidate on a daily chart for Celgene actually having found a bottom. Now, when we take a look at those wave counts, because we do not want to be disingenuous, ever. Because if you think the speed, if there's nothing moves faster than the speed of trust, think about that in today's day and age. Nothing moves faster than the speed of distrust out there. We don't like that distrust stuff. So we take a look at when you get to that wave number 4, looks like there was a decent bounce. We do the wave counting from there and move to the upside just so we can run those secondary counts out here. That takes us to the day of December the 11th. So let's just start doing our secondary counts to the downside. And what do you get? Voila. You got Doble-Gees out here, or G's is really what I should say. So you've got your second seventh wave move to the downside. Is this the bottom in Celgene? Boy, it is absolutely a candidate for one. How do you play that? You know what you like to see coming off of a bottom out here? Well, first of all, one of the easy ways to play it is you take the trade, and if this thing closes below the low at this stage here, that'd be 86.55, you potentially go ahead and close it out. You likely close it out. But remember, prices moving lower, doing less relative energy out here. So even though one pattern could fail, another one could continue out here. So what you'd want to do is you'd want to start chipping away. You don't have to take your full position size if that's what you want to do. You can wait for a sign of strength to get off of this bottom. There's going to be resistance, lots of it. In fact, the most recent swing point was up here at the high of 93.57. You're at 89.25. You know, maybe you want to. So, is it a candidate? And that was really what the question was. And hey, you know, others have said this might be a buyable bottom. What does Stevie say? Absolutely. I don't know what patterns it was that they were looking at, but the patterns that you and I just looked at say the answer there is not blowing in the wind. It was right there on that chart. Now, no more of the questions in here, so let's get back to answering the question, what is going on in the markets? And have the markets given us a signal as to how they're going to react to the Fed's decision, whether they're going to raise rates or not, by how much, how often, what are they going to call it, what's their outlook, all of those different factors that are going to influence what buyers and sellers are doing. Do we have any clues whatsoever? The answer on my chart says not a chance. No, we don't have a clue as to, I don't have a clue as to what the markets are going to do, because right now we've got a lot of conflicting pieces of information. So let's go take a look at what we do know. That's usually the easiest way. We do know that there's a high probability of a chance that the rates are going to be raised today. Now, many people believe that if the rates are raised today, that what we're going to see is the Treasury bonds start to tank because rates are going up. We're probably going to see gold move lower because the dollar is going to move higher, and we're going to see the S&P 500 probably move lower too. You've probably heard stuff like that out there, or some derivative of information like that out there. And of course, Stevie says, how do you arrive at that conclusion? And what conclusions can we arrive at? Because that's really the question. If you ask a lousy question, you're going to get a lousy answer. We don't want to do that. Not around here. Instead, let's go take a look at maybe some historical perspective out here. And then we'll take a look at what's been going on since we've been raising rates. But if we go back to a similar, not the same, but a similar period of time when the Fed was raising rates, that takes us back into our 2004 timeframe where we saw 17 increases in a row, basically at every meeting out there. What we can do is we can go take a look at each of those rate increases and try to figure out what was the market doing. Let's just start with the simplest approach. The Fed began raising rates back in June of 2004. I just shared with you they did it till June of 2006, or 17 times in a row, if my math was correct. And what we know was that the top portion of this chart that you're looking at, which is the continuous contract of gold, was down around the $300, $330 area. And what we know is by the time rates were finished moving to the upside, gold had made it up to $700. So rates were rising and gold was rising during that same time period. Something to think about. Now, did gold rise at every rate increase out there? Well, I'll leave that work up for you to go figure out. Let's talk about a 30-year Treasury during that time period, or at least a portion of that time period. From June of 2004 until June of 2005, did the 30-year Treasury get tanked? At periods of time, but no siree, doodah day, or something along those lines. The 30-year Treasury during that first year moved substantially higher, We're talking about getting into the 120 level. Where is it, 119? And where it started when rates had begun rising was in the 106 area out there. So just because the Fed is going to increase rates today, don't get trapped by believing that the 30-year Treasury is going to get tanked, or that gold is going to get tanked, or that the S&P 500 is going to get tanked. Because what we know about the S&P 500 during that time period of lots of rate increases, we're not just talking about is it going to be 3 or 4? That thing gained 12% over that 2-year period. That's right. We'll just call it 6% per year out there inside the S&P 500. The other thing that's in common with this chart is that in 2004, you had that repatriation of like about $500 million or so. Wasn't it something like that? Versus $2.5 trillion, or how many over trillions it is that are being repatriated back here, let alone tax cuts. Oh my goodness. So what do the stock charts tell you? Stock charts tell you anything can happen. And if we fast forward to today and the last 5 rate increases that we've had out here, we'll go take a look at them. If you think you have this thing pegged, I'd say you probably got another thing coming. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're just taking a look at here, and in essence, the summary is short-term rates can go up, long-term rates can come down, meaning the 30-year Treasury can move higher, and gold can move higher. All those things can happen simultaneously out there, and that's important to know. At least I believe it's important. If we take a look at the last 5 rate increases, which began back in December 17, 2015, that's when the rate went ahead and moved their short-term rates to 0.5% out there. On December 17, 2015, what we saw was gold put in a bottom. Put in a pretty substantial bottom back then. Was it coincidental? Maybe it was, if you believe in coincidences. You did see the 30-year Treasury for a small period of time actually move lower out there and then move to the upside. Move to the upside while gold was moving to the upside. So it can happen out here. If you take a look at the following rate, that was December 14, 2016, so nearly a year before the Fed found their britches, so to speak. And in that case, gold moved lower for a short period of time. The S&P moved higher just really actually moved higher out there. Nothing substantial, but continued to move higher out there. And the 30-year Treasury bond itself moved lower. So longer-term rates were pulling back. If you go to March 15th out here, 2017, gold found a bottom. Yeah, it did. And you saw a nice move to the upside. Could that happen again? Absolutely, positively. The S&P began to pull back just a bit out here. And again, the 30-year bond moved higher. So you see there now, do I know what's going to happen this time? I don't. You go to the last rate increase. That was December 13, 2017. Maybe it was the seasonal pattern inside of gold. That's the last bottom that we had from a closing basis inside of gold. That took place the same day. Is that going to happen this time? I don't know. Right now, if I knew, I would tell you. At 1:32 in the afternoon, I would absolutely tell you. Here's what I can tell you. We take a look at gold out here. We can tell you a couple things. Number one, gold is trading right up into resistance. Resistance is what? It's Stevie's red line. It's just slightly under where we're trading right now, 1321.40. We're going to call Stevie's red line 1321. So what we've seen so far this morning is nothing more than a counter trend rally inside of gold, just testing resistance. You close above Stevie's red line, then you're up to the 1339 level. That's the top of its daily market profile. It's also the top of its descending price channel. I don't know if that is going to contain gold or if there's going to be a breakout. But I would say if you close above 1339, then there's a breakout party. You can go back and take a look at what took place the last time and say, you know what? Gold just put in, likely, we'll caveat it, gold just likely put in a bottom. And if it doesn't, then it reacts the other way, which it could out here. Then what you're looking at is you're looking at gold heading down probably into the 1281 level, probably the 1281. I don't know which way it's going to head right now. And I don't think anybody else does at this stage. Can you make the case that gold actually formed a nice bottom today? Positively, or some type of phrase like that, especially when we know what has taken place before when the Fed has raised rates out there. If you look at silver for a clue out here, did silver give you and I a clue? And the answer, my friend, is no, because all silver did was run into resistance too. Take a look at silver running right into the descending price channel that was out there. It hit it to the T. So prices traded above Stevie's red line. Maybe silver really gives us the clue because it would likely be the first instrument of the two to actually close above its descending price channel out there. So you can go ahead and put that descending price channel on your chart for silver, and then you'll have the final answer out there. But as we speak at 134, is anything tipped its hat? No. But can you prepare for all three instruments actually moving higher for a period of time? The S&P, rates, treasury bonds, gold? Yeah, it could be one big bullish party to the upside. Now, one thing that is another possible positive out here for Goldilocks is the following. And this is where you're going to want to really see, and I hate to use that expression at the end of the day, but as we take a look at gold priced in euros, you specifically have been saying, you've been knocking on my door saying, Steve, you've got to look at gold priced in euros. And if as long as it doesn't take out that 1064.20 level, that is short-term bullish out here. Well, it's turned up in dollars, gold that is. It's turned up in euros, that is. You see a break above 1107.70, you're going to see a nice run in gold to the upside. And that's the way that I see it when I look at my charts. Let's go to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you today? Ron, do we have you? I know Ron wants to take a look at Delta Airlines. DAL is a ticker symbol. We'll see if we can get him on board here. Ron?
Oh, yes, sir.
How you doing?
Hi there, Steve. Thanks for taking the call. I just thought that a lot of call buyers, apparently option buyers on Delta for the next for April, and I just wonder what the chart looks like for DAL, and if you would cover that.
Yeah, sure. So if we take a look at Delta, there's a couple areas of resistance, or one area specifically of resistance that you need to see this be able to get above, and that's 57.14. And that was the trading day from January 24th where it gapped to the downside. Big gap. So gaps are your friends. You clearly know where resistance is. It's at 57.14. It's been hit a couple of different times out there. Hasn't been able to get through there. What it did today it pulled back to 55.20. Actually got down to a low of 54.75, but 55.20 excuse me, was the bottom of its task market profile. So if you're in the camp that you want to get in on that trade, that's an area at 55.20 where you would take a look at going long. It does not tell us whether price is going to move above 57.14. What we know right now is it hasn't been able to. If it does close above that, then it's headed back to its most recent highs out here from January, which is in the 60.79 level. But is it giving you and I a clue right now? The only other clue that I have to support that it can break through that 57 barrier was the mere fact here, and for whatever reason, my chart's not inputting today's price, but that's okay. Ron, what it does is it takes me back to March 14th. And on March 14th, that's when the price oscillator, the difference between two exponential moving averages, the 39 and 19, took its price oscillator right up to the zero level. What you and I look for when that occurs is a test of Stevie's red line and price. And that's what you got yesterday. And you saw a close above that. That's 55.70. And that says that this has actually entered the next bull phase to the upside. So can I see why people are buying call options on it? Sure. And if you're going to do the same thing, just remember to use that and reduce your risk, not increase your risk, because you certainly have some significant resistance to the upside. But I like what our Ninja Trader chart says. Today, you had a level of support held. Now you just need to see this thing close above 57.14, and then it's back to the highs. Does that help you out?
Oh, great. Thank you very much. Fantastic.
You bet.
Thank you.
Thanks for calling in. That was Ron in Denver, and that was Delta Airlines. Right now, the Dow's up about 100 points, give or take. The S&P's up 7. And we'll be back after this short break.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Lee in San Francisco writes in and says, can you give me your take on the IWM short and long term? I just got in 2 days ago. So if I take a look at the long term, and Lee, thanks for writing in, much appreciated. And San Francisco, what a blast of a town and city that is. So if we take a look at it, Lee, long term, what the Russell 2000 or the IWM, let's say specifically, is going to do, it's on its way up to 188.48. You're right now at 157 or 214.28. And I'd say it's more likely the latter out there for the eventual price target. This has a nice confirmed A to B equals CD to the upside. There's still work to be done. And really what we're looking at, Lee, is we're looking at the swing point from June of 2015. There were 669 million shares, and that was passed with 901 million shares. That's what you like to see. So long term, the IWM wants to move to the upside. Short term, well, that could be a different story out here. Here's what you like as we take a look at the ETF structure, and I'd really prefer that you and I go take a look at the equity futures contract. Then we're going to have a better set of profiles. But you asked specifically about the ETF. This thing moved back on March 19th with volume of 25 million shares. In essence, that was going against 22 million shares, so not a big deal. It held support, that being the bottom of its TAS market profile, 155. If I pulled this chart over here for you to take a look at on the IWM, you're going to see where the snipers are hanging out. So you've got resistance really right overhead. And when I say overhead, we're looking at the day of January 25th. That's its all-time high. Nice bearish nice bearish engulfing that's set up out there. So that's in the 160 range. You can see a few days later in that 160 range, nice little shooting star, the opposite of a hammer candle. You then gap to the downside. So up in this range here is nothing but snipers, nothing but sellers out here. And that's what you're going to run into. And you are going to run into it, or you're going to run into it at some point in time. That's for sure. And then if we come back to March 14th, another bearish engulfing as price was getting into its highs out there. So we know where the sellers reside. And if you can get through there, then it's just simply a continued move to the upside. I do like, if we take a look at the Russell here, at this stage, this thing is in a nice little rising price channel, I believe. Let's see if we can look at this chart here. I think I even have it out here in the Russell 2000. So here's your nice little rising price channel. I'd say stick with this trade out here. If you see it close below this rising price channel out here, you would anticipate or expect lower prices. And by lower prices and where that is today, that's at about the 1553 level out here. If it closes below that, then you are likely, doesn't guarantee it, but you're likely to head back into that swing point from March the 1st between 1522 and 1494. So to sum it up, the Russell itself, it's got resistance right around the 1590 level. To be specific, 1590.11. You're trading at 1579. You'd like to see it close, quite frankly, at least inside of 1599.49. Doesn't have to do it today. If you see it close inside that, then you're going to get up into the 1602, into the 1611 area. And that's your resistance. So thanks so much for writing in, for listening. Much appreciated. No other questions that I see on the tote board, although let me check the emails here just to make sure. Because if you spent the time to write in, I'm going to spend the time to go take a look at what it is you requested. I don't see anything inside the den, so that leaves us kind of like surfing around. Let's go surf around. Let's go see if we can find any other signals out here. We take a look at the summation index. That means taking a look at the advanced decline line, not the advanced decline line, the advanced decline oscillator readings. That's for the New York Stock Exchange below zero, minus 23. Says bears are in control, but you can see that it too. That's the left panel of our screen, a nice little rising price channel that has formed, but it's got a descending price channel. So I don't know in the New York Stock Exchange which one is the more relevant one. Perhaps we'll know by the end of the day. If we take a look at the NASDAQ composite, its advanced decline oscillator reading is above zero, and yet it has an island top out there. So I would say it's confused. 74.35 right now, that is the resistance zone. You're at 73.80. So we have conflicting signals here, right? Conflicting signals. It's very clear. If you look at the Dow, well, the Dow's advanced decline oscillator reading down below zero. Price has held its rising price channel. You can see the channels that price is in. That's chart number 3. And voila, if we take a look at the S&P 500, we go take a look at that spot volatility index. It's trading at 1713, just slightly above the 50-day, which is 1706. So I don't know what the markets are going to do. I don't think the markets know what the markets are going to do. I don't see any clues out here. Gold running into resistance, silver running into resistance out here. I just don't see it just yet, but it will be revealed to us, or should be revealed to us. And if it's not, well, we'll go back to the drawing boards and we'll draw a few more patterns and try to figure out where are things headed to. The weakness, perhaps the biggest weakness in the market, would be the liquidity. The liquidity gauge, and we take a look at what are traders and investors doing with the high yield bonds out there, the high yield income bonds. And you and I, we like that Alliance Bernstein Global high income ETF out there, mostly because we just enjoy saying it, because it's a test. But what we do know is the low that came in on this, and this is back, this is sort of a leading indicator. It's enough of an indicator to really tell us what's going on in the case of liquidity. We don't have to just look at that. We don't have to just look at the spot volatility index for a liquidity gauge, a short-term one. This is a little bit longer than that, and we're taking a look at the low from February the 5th out here, and that was at 11, not the low, the close of 1190. You're trading at 1191 right now. But if this thing and how this reacts to the Fed, and this is not where anybody else is going to be looking, but you'll be looking here. Because if this thing breaks through that, really suggests to be careful, be very careful on the long side. That doesn't mean that prices can't move up. Please do not misinterpret it. What this means is that liquidity is really shrinking out here. Because as you take a look at these two charts, the conditions that are better are high liquidity timeframes. When money is chasing after the high yield bond funds and money is chasing after the S&P 500, that's what you like to see. There are time periods where we don't see that, but you have to be careful because then you could be stuck with the hot potato. And I don't want you stuck with the hot potato. And that just means we have to take defensive measures and use other tools out there. But this is also not giving us a clue as to what it wants to do. Talk about everything trying to get back to neutral to then figure out what it wants to do. That's what Stevie sees when I take a look at all the price movements that have taken place today. So when we get back from this last breakout here, we've got perhaps the final request of the day, which is Dr. Copper. Maybe Dr. Copper has given us a signal, and so we'll take a look at that when we get back from this breakout here. Dow is up 110. S&P's up 9. NASDAQ 100 up 12 bucks. Russell is the big mover of the day, up 0.7%. Just behind it is the semiconductors. But I don't know if any of that really means a hill of beans. I just don't. And if I did, you know I would tell you. Steve Rhodes with TFNN. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's up 122 right now. S&P is up about 10. And as we finish out the session pretty much and go take a look at the Dr. Copper, we're looking at the MA contract right now. And if we look at this chart here, this is my Ninja Trader set of charts. What we do know is Stevie's red line is a resistance level. So should you be trading this to the upside, you're going to be looking for that to see if that acts as resistance. That's at $3.10, 3.100 right now. What you see on this set of charts out here, you see nothing but green boxes. The last one to form was yesterday, and that is an indication for us that it is sellers that are in control. Now, the way that the Rhodes Momentum Indicator trading system works is if you got a close above yesterday's session, then you would have a buy signal. And coincidentally is that you're really looking at Stevie's red line as well. So you need a close above that to say that on the daily chart, well, maybe you've got something at this stage of the game. If we take a look at this chart out here, you can see an A to B equals CD to the downside. That takes you right into the 293, maybe $3 level out here. No completion, no bullish reversal signal. Anything along those lines. Last bullish reversal signal was March 9th. The low of that session happens to be resistance, old support, now becoming resistance out here. So that's another area for you to take a look at. That's at 3.055. Dial 555 out there. If we go take a look at one set of charts out here for its TAS market profiles, you'll see the 60-minute price above the top of the box, but the 240-minute, that is resistance, $3.06 out here. You can see the bottom of the daily box at 311, the bottom of the weekly box at 318. So watch Stevie's red line. Watch basically the 311 level. If price can get back and close above that, then you're on to something to the upside. Is it just a 318? Could be, but that might be good enough for a trade. So, folks, stay tuned, because in about 4 minutes, you're going to get the release of what the Fed is going to do. And then you're going to get the conference, you're going to get the question and answer period at 2:30. Maybe by 3:30, we know what the markets have decided to do. Stay tuned. David White's up next. Tom O'Brien, 3 to 5. I'll be back with you. Hey, tomorrow morning for Larry's show at 9 o'clock. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.